Looking ahead to the trading week beginning January 5th, the first full week of trading in 2026, stocks are weak heading into the new year, making it highly unlikely a Santa Claus rally will materialize. A Santa Claus rally has a loose relationship with a strong January, and a strong January supports the January Barometer theory. This theory posits that a positive return for stocks in January often predicts a positive full year, with historical data since 1945 showing the S&P up 86% of such years, averaging 16.2% in gains. A negative January correlates with weaker performance, though much less reliably. Studies from 1950 onward confirm 75 to 87% accuracy for positive signals, but skeptics highlight that markets have an upward bias and inconsistencies like only 64% matches since 1996 cause a problem. While useful as a rule of thumb, it's not foolproof as a strategy and certainly doesn't account for intra-month volatility or drawdowns. Now, the first clean payrolls report since the government shutdown drama is due Friday, January 9th. Expectations are for about 55,000 jobs added, slightly below last month's 64,000. Since this is the first report that shouldn't be distorted by the shutdown period, traders may treat it as a cleaner read on the labor market. Average hourly earnings are expected to rise 0.3% versus 0.1% last month, and the unemployment rate is forecast to dip to 4.5% from 4.6%. This is the first major 2026 data point and could move rates, commodities, and stocks. Looking ahead to next week's earnings, we have 21 companies with market caps over $1 billion reporting earnings, including Constellation Brands, Albertsons, Cal-Maine Foods, PriceSmart, Acuity, WD-40, and TD SYNNEX. Economic data next week. Sunday night, we get Minneapolis Fed President Neel Kashkari speaking. We also have Caixin Services PMI out of China. Monday, we get December ISM manufacturing PMI data in the US. Tuesday, services PMI for Germany, the Eurozone, the UK, and the US, as well as German CPI data. Wednesday, German employment data, Eurozone CPI, and the US December ADP employment data, factory orders, and JOLTS job openings data. We also have a speech from Fed Governor Michelle Bowman. Thursday, unemployment rate, and in the US, jobless claims, non-farm productivity, and unit labor costs. That evening, we have household spending from Japan and CPI data from China. And then Friday, German industrial production, and then the non-farm payrolls data in the US that I mentioned, along with housing starts, building permits, and preliminary January Michigan consumer sentiment and inflation expectations data.